What is up, investors? I'm TPG Investing, and today I want to talk to you about a company that has really caught my attention. They recently announced their full 2020 financial results, beating expectations and showing a 95% increase in revenue. The company I want to talk to you about today is Skillz. They are listed on the NYSE with the ticker SKLZ. This is a company that went public last year through a SPAC merger with Flying Eagle Acquisition Corp, and seen its share price rally up to highs of over $46 in February before coming down to lows of $18 at the end of March and is currently trading at $19. Before we get into the video, if you like the content, can I ask you to smash that like button? It literally costs nothing but helps me out so much. It shows me that you want to see more content like this and also helps the video by showing the YouTube algorithm that viewers like this type of content. We are aiming for 150 likes in this video. Let's make it happen. Subscribe to the channel if you're new and hit the bell notification so you never miss a video with the potential to make you money. Do you think Skillz is undervalued, and what are your price targets for this year or the next 5 years? Leave a comment down below, I want to know what you think. Make sure you watch the entire video and don't enter into any stock blindly without viewing all the information on offer. I want to point out that I'm not a financial advisor and this is not financial advice. At the time of this video I did not hold a position in Skillz, but that may change over the coming weeks. Now let's get into it. Skillz is an online multiplayer games platform, focused entirely on tournament-based mobile games market and offers a small selection of games. The gaming market in general is worth over $175 billion and has been expanding for many years. Don't let anyone make you think the pandemic is the reason for this industry's attention this year. This has been a growing industry for the last decade, the pandemic merely accelerated. Of this $175 billion market, roughly about $86 billion is in the mobile gaming niche. Now, there are many online games platforms and many game developers. However, what Skillz offer is different from the rest in many ways and is quite unique. One of the most impressive stats I have seen on Skillz is the minutes per paying user per day. Skillz outranks even the most popular apps such as TikTok, YouTube and Facebook. So what makes Skillz different from the rest? Firstly, Skillz offers a skill-based competitive gaming experience where anyone with a phone can compete to win cash prizes. While the esports sector in general is made up of a very large player base with less than 1% that are good enough to compete professionally, and in general the costs of competing are quite high in comparison to mobile gaming, because to compete in esports the pros are spending thousands on equipment such as monitors, high performance GPUs and their computers in general. Whereas to take part in mobile gaming all you need is a pretty decent smartphone. Skillz is targeting the other 99% to play games every single day but will never be competing professionally. Their slogan is Operation Esports for Everyone. By bringing player competition with prizes to mobile, Skillz is letting anyone and everyone compete to win real money. Firstly, I want to point out that while there are plenty of mobile apps out there where you can win prizes, these tend to be luck based, such as mobile casinos, and are classed as gambling. Skillz is purely skill based and therefore is not classed as gambling. Skillz also provide the platform for these games. They don't actually make any of the games themselves, and this brings so many benefits. The cost of research and development of games is usually a huge cost, but Skillz do not have these costs. Developers can upload the games onto the Skillz system to transform their mobile game into an esports event or tournament so that anyone with a phone can compete. Skillz believes it has pioneered the future of the gaming industry, enabling developers to monetize their content 5 times better than ads or in-app purchases by enabling developers to expand the reach of their games and scale their business. Skillz has a proven track record of improving mobile game economies. The average revenue per user of games built on the Skillz platform is more than $7 compared with around $2 for ad-based games. The competitive advantage here for Skillz is their anti-cheat algorithm. Cheating is unfortunately super common in esports. Just think of games like Warzone, where cheating has become the norm. Just look at YouTube and you will see video after video of people hacking the game. Therefore, a strong anti-cheat algorithm is the most important piece of any mobile esports game. And with Skillz being the first mover in this space, the company has built the industry's best anti-cheat algorithm, leaving Skillz strategically positioned to dominate the esports technology infrastructure market for the foreseeable future. Skillz was founded and launched in 2012 by Andrew Paradise, who is still the company's CEO, and was brought public in December of last year through a reverse merger with Flying Eagle Acquisition Corp, which is headed by Harry Sloan and Jeff Sagansky. I had been looking into the stock back in December after seeing the success the Flying Eagle team had with previous acquisitions, such as bringing DraftKings public. But I was waiting for the dip and was waiting for the post-merger dip to come, but neither came and the stock kept going before reaching heights of $46. Harry Sloan has a very impressive history of bringing companies public and has also tons of gaming industry experience. Harry has been the director of ZeniMax Media until 2021. ZeniMax is the holding company that owns the likes of Arcane Studios and Bethesda Games, responsible for gaming series such as The Elder Scrolls and Fallout, so Harry Sloan knows a bit about being successful in this industry. We'll talk a bit more about the gaming industry and Skillz later, but first let's look at some technical charts and then the company's finances. So we can see here from the 1 year chart that Skillz, or Flying Eagle Acquisition Corp as it was then, was trading around $10 to $11 until November. Then it started to gain steady until the merger was complete in December and continued to move upwards throughout January and into February, reaching heights of $46 in February. It's at this point that the stock began this downward trend, as we can see here, and since the high in February has been moving in this channel consistently, finding a level of support and resistance. As we can see from this graph, over the past 2 weeks the stock price has been moving in a sideways channel roughly between $17 and $20. On a number of occasions it has tested the levels of support and resistance without breakout. But I do see this sideways movement as a signal that the stock has done most of its dropping, is leveling out, and might be about to begin an upward movement. There is also an indicator here that the stock is currently oversold. So let's look at what the analysts think. When we take a look at tip ranks, we can see that 6 analysts are offering price targets for Skillz at an average of $30.67. This average is from the high target of 34 and a low target of 27. The average price target represents 71% upside from the current price around $18. When we look at market beat, we can see that 3 of these targets have been set within the past month, with UBS Group, Canaccord and Stefan Nicholas giving the recent ratings. Also, Simply Wall Street places a fair value of $45, meaning that this stock is currently 61% undervalued. So why did the share price plummet in recent months? The first reason for the drop in share price, in my opinion, is the general market correction that has been going on since February. A lot of companies have followed the exact same trend line as Skillz. The second reason has been that the general market sentiment has significantly shifted away from SPACs, and any companies that have recently gone public through SPACs have declined. The company also completed a public offering of 32 million shares. And then there's the untimely selling of around $200 million worth of shares by CEO Andrew Paradise. Worth noting, however, that this amounted to little more than 14% of his total holding. Another reason for the steep decline could be the publishing of a short seller report by due diligence firm Wolfpack Research at the beginning of March. But there's a lot of things to like about Skillz. Back in February, it was announced that the NFL and Skillz were teaming up to develop an NFL-themed mobile game. As part of the agreement, the 2 sports organizations will host a global game developer challenge. The game will have joint marketing support from both the NFL and Skillz and set the stage for future esports competition, and is expected the developer challenge will launch in the second quarter of 2021. This will be absolutely huge for Skillz. At the moment, the company could be considered a beginning stage growth company, and the games that are currently on offer tend to be more basic or classics, such as solitaire, pool or bowling. Being able to develop an NFL game would also be marketed by the NFL would bring massive attention to the company and really propel them forward. Cathie Woods and ARK Invest have been buying shares of Skillz for months. Now, I subscribe to ARK and I get the daily reports of what they're buying and selling, and although they haven't actually been adding to the position, they also haven't sold any. ARK currently holds just under 6 million shares of Skillz, and it makes up 1.6 of the next generation ETF, sitting at 22nd on the list. If the current share price were back to its high point from February, that would put Skillz in the top 5 of this ETF. I take this as a good sign. Also, looking at Simply Wall Street again shows that the general public owns 35% of this company, with the remaining 65% owned by institutions and insiders. Now, usually I like to talk about the company's management teams, but I don't want to go into too much detail here because we've already briefly mentioned CEO Andrew Paradise and Harry Sloan. But one addition to the board that I find very interesting is the recent appointment of Jerry Bruckheimer. The appointment marks the first time that Bruckheimer has accepted a position on a public company board. He has a deep track record of success across the entertainment spectrum, and his films have grossed more than $18 billion, ranking him among the top 5 producers of all time. He is also co-founder and co-majority owner of NHL franchise Seattle Kraken. Now, we've already mentioned that Skillz has entered into a contract with the NFL, but could having the likes of an NHL franchise owner open the door to another partnership? Also, with the gaming industry almost twice the size of the movies and expected to double by 2025, having someone with the unique abilities that Jerry Bruckheimer brings is surely a valuable asset. Now, let's look at the company's recent financial statements and highlights. Revenue grew by 92% to $230 million in 2020, compared with $120 million in 2019. Gross profit grew 91% to $218 million, and gross profit margin was 95% during 2020, the same as the year prior. That gross profit margin is insanely good. You will have a job in your hands to find another company with consistent margins that high. The net loss was $122 million during 2020, compared with a net loss of $24 million in 2019. The net loss is concerning. It's 5 times the loss of the prior year, but we'll look more at this in a moment. The GMV, which is the total fees paid by users, grew 80% to $1.6 billion during 2020, compared with $886 million in 2019. As of December 2020, the company has $263 million of cash and no debt. They are also forecasting 2021 revenue guidance of $366 million. Now, although the company has no debt and $263 million in cash, the cash wouldn't last too long while making losses of $122 million a year. Imagine if that loss was to increase at the same rate next year as this year. Imagine the effect on the share price. So I feel the company was 100% justified in the recent share offering. When we look at the prospectus, we can see that the company intends to use the proceeds for working capital and general corporate purposes. This is a beginning stage growth company, so losses are to be expected from this type of company. And clearly management feel that the additional $400 million should provide them with a reasonable cash runway. When we look at the income statement, we can clearly see that increase in revenue. We can also see that sales and marketing is by far the biggest expense. Again, this is totally expected of this type of company. Sales and marketing are always going to be major expenses at this stage, and hopefully we'll see that increases in revenue should pay off over time. Then looking at the balance sheet, straight away we can see that the company has very little liabilities with an asset to liability ratio of 6:1. This is mainly made up of cash, and when we add in the $366 million from the share offering, we will be left with a very healthy ratio of 14:1. Overall, this is an incredibly strong balance sheet, but at this moment in time, it is fully needed. So before we get to my final opinion on the company, I hope you enjoyed this content. Drop a like if you did. It really helps the video get out to more people. If you've watched all the way through, then fair play. I hope I've shared some information with you that you weren't already aware of, and I hope you found value in this video. If you're new to the channel, hit the subscribe button and bell notification. What is your price target? Leave a comment down below. I want to know what you think. So, for my final opinion on Skillz. First, I want to say that I really like Skillz. I really like the business model, and I think they've got huge potential. This is a stock that I was looking at a few months ago when it was still Flying Eagle Acquisition Corp. I think they're in an industry that is ever expanding. Don't let anyone tell you that the gaming market has exploded recently because of the pandemic. Although the pandemic definitely has had an effect, the proof is there that the gaming industry has been growing steady for the past decade. I touched on this in a previous video I did on Corsair Gaming, which is another company that I really like in this industry, but they're in completely different market niches. At the moment, my biggest concern would be the huge loss that they posted for 2020. These kind of losses are not sustainable without doing a lot of capital raising. However, this loss is to be expected and hopefully not repeated. The company has met expectations regarding revenue and costs, and as long as they continue growing at the level they are predicted, they will be fine. It'll be interesting to see how the deal with the NFL goes, and if the company could get similar deals with other sports or potentially with other sectors such as movies. Jerry Bruckheimer's influence here could have a huge effect in my opinion. Overall, I would say at the moment this is a lower risk investment for the long term, but I wouldn't be investing for short term gains. As always, there is the risk that this could go down much further than its current price, so please guys, only invest money that you can afford to lose. As always guys, this is just my opinion, and if anyone is thinking about buying into the stock, I encourage you to do your own research. As I said before, I am not a financial advisor and this is not financial advice. Thanks for watching the video. What are your thoughts on the future of Skillz? Catch you in the next one.